Hi, it's Mike with AskTractorMike.com. Well, first half sales numbers from the Association of Equipment Manufacturers are out, and for tractors and combines, and it's a little bleak. And I'm speaking today with Kenny, who is corporate sales manager at S&H Farm Supply, big New Holland and Coyote and Bush Hog dealer in Southwest Missouri, where I used to work, where I kind of cut my teeth on the dealership world. And Kenny is not only a corporate sales manager for a chain of dealerships, but he's also on the board of Ag Direct. Am I right, Kenny?
It's FCS Financial, which is a farm credit cooperative in Missouri, and we are a partner with Ag Direct.
So he's just fresh back from a meeting where they talk about trends in agriculture. And Kenny, I wanted to get your analysis on this. You participate in the small tractor and mid-range tractor market and dabble into the bigger tractors. Being on that FCS board, I'm sure you talk about the row crop tractors, articulated tractors, and combines. So you're kind of uniquely positioned to comment on all these. But I'm going to put up the numbers right here. This is the AEM report, and if you notice that first column there that says June, I don't pay attention to the monthly numbers. I look over to the column to the right, which is the YTD year to date through June first half. And numbers are down everywhere. Kenny, what's going on?
I think there's multiple things going on. Number one, periods of rapid change or uncertainty always lead people to avoid major purchases. I think that's our political climate, our worldwide economic climate. Those things have all played a role in people delaying decisions or putting off major purchases. Interest rates remain pretty flat, at a moderate, I would call a moderate level. Some people would call them a high level. My position, I would call them a moderate level. There still are inflationary pressures, even though our numbers, recorded inflation numbers, look, there's still inflationary pressures out there. But when I look at these numbers overall, I think in the under 100 horsepower segment, that just shows the resilience of most of those people have some off-farm income. They're not totally reliant on commodity prices and the markets and production to fuel the engine. I think, looking at the four-wheel drive, the 100 plus horsepower in the combine market, that shows some obvious cost price squeezes that are going on in production agriculture. And even it looks like we're going to have great yields in 2025 across a large area. It's good for individual producers. It's good to have a crop. It's probably going to put some negative price pressure on an already challenging environment. So I think those are the big key pieces that have played into it. We'll look at some other data I'm sure that you've got for us.
Yeah, right. Let's look at this graph right here. I started kind of doing these reports back in right at COVID in 2019, and I took we're far past the COVID thing. 2019 I took as a benchmark of, well, this is kind of normal, and then 2020 and 2021 were crazy with the trying to absorb all the impacts from COVID. But now we're in wide open territory where we don't have anything like that artificially impacting the market the way COVID did. But you're looking at the yellow highlights are the lowest sales in 7 years if it's highlighted in yellow, and you'll notice that the small tractors, mid-range tractors, and combines are at their lowest level through first half in the U.S. That they've been since back before 2019. And the other two segments of the market are within 8% of the lowest they've been in that period of time. So that was kind of eye-opening to me. The market's pretty soft right now. Let's relate this to customers, Kenny, and I'm going to pull up some other graphs here. What I try to track, because this is kind of what relates to customers, is the inventory related to sales. And I'm pulling up we're looking at the under 40 horsepower right now. And what you see here is a long downward trend in sales since COVID. And the manufacturers have adjusted. And reason this is important, if these lines are way apart, The blue line is sales. The orange line is inventory. If the orange line's up high, look for bargains. What do you take from where that graph is right now?
Well, I think number one in all these segments, and when I look at the first shot you put up there, and you look at those big changes in numbers, you put yourself in the role of a manufacturer and think back to all of us as dealers and customers. We were screaming at manufacturers in 2018, 2019, build us more tractors, build us more tractors. These companies invested literally billions of dollars to get to a point where they could produce more, and then we put the brakes on it. You know, I have to give kudos to the big four manufacturers. They did a good job of reading the tea leaves and preparing for this. And you know, we could have been in a situation now where there was just a phenomenal inventory glut and a lot of pain. And most manufacturers have adjusted quite well and have kept inventories in line. To that point, if you're in the tractor market and you're expecting a bargain tractor, I think you're probably never going to buy one, because I think the truth is that manufacturers have become honest with us as dealers and with customers, and it costs this much to build a tractor, and we have to earn a small margin to stay in business, and this is what your tractor is going to cost. And you know, we're not. If you guys don't want to buy them, we're not going to build them.
I really feel like in my car shopping, used to you could find somebody with aged inventory in the car business and get a bargain, and I think that day's gone too. I think manufacturers of all types have gotten where they're really good at predicting how much to build.
Yeah. You know, in the United States, I know people across the world might view this, but in the United States, we're used to buying from inventory, right? And that's not true in all the world. There are a lot of places where they have places that you go to a fair or a show or a manufacturer event, and you put your order in for a tractor that's built sometime in the next 6 months to a year. And it's not, you don't go to a lot and test drive one and drive it home. But that's something that I'm thankful for. I like that style, but it's not everywhere, and it's something that's probably changing a little bit here. And when you look at certainly the high horsepower, the four-wheel drive, and the combine segment, it's getting a lot to that point today. There's not a lot of stock inventory ordered in those segments. Most of those orders are retail today, and they're pretty specific.
Now let's go to the mid-range tractors, 40 to 100 horsepower. And if there is one place where it might be a buyer's market, it's here. What are you seeing in that market?
There's a lot of competition, I would say. Yes, certainly in Southwest Missouri, there's a lot of focus on this market. This really hits the cow-calf producer, the beef guy, the part-time farmer segment, and we are big players in that market. That's a lot of our customers. It has some potential, I would say. If you look, you know, it's how you want to view pricing. Can you get an advantageous deal? Is $2,000 to $5,000? Is that considered a win to you on a $80,000 tractor? I guess incrementally you have to say yes. I would still tell you, in that buyer market, where you buy the tractor and the relationship you have with that dealer is going to be more impactful to your satisfaction, your long-term benefit, than the brand of tractor that you buy or the price you pay for it. And I don't know any way to say that more clearly, Mike. It's our world is about taking care of customers. It's about teaching customers. It's about helping customers make the right decision on what tractor to buy for what they're going to do. And that's more than the price of the tractor.
Yeah, that's a sermon I have preached for the entirety of this YouTube channel. You can save a buck or two and really mess yourself up long term if you don't form a relationship with the dealer. Here's over 100 horsepower. I'm pulling that up now. Uh, I tell you what shocks me on this graph is how quickly the manufacturers were able to pare down their building tractors. That thing fell down pretty quickly. What's going on in this market?
This is one that you're starting to get into the production segment, and I think really when you look at this graph, what's really being spoken to here as much as anything is this is where the run up in inflation and the cost of manufacturing is most evident. This is probably where we've seen some tractors in the low 100 horsepower, under 150 PTO horsepower that have taken a $50,000 price increase in 4 years. Wow. And I think that's impacting this market pretty hard. The thing that I guess surprises me in this segment, specifically in my market territory, we are the cow-calf mecca of the world, and the beef market is, in reality, it's setting price records on a weekly basis. Somewhere each week there's a price record that falls in the feeder cattle, fat cattle, cow-calf market. And so I anticipate that this segment will see significant activity in the second half of the year as we do some income management, planning for the future. Those guys have been harvesting good income for the last 18 months. They haven't made a lot of major purchases. A lot of money's gone to infrastructure and improvement on their properties, building fences, corrals, those kind of things. But their income is up enough that I look for this segment to have a strong finish to the year.
Now let's go to the bigger tractors, the 4-wheel drive articulated tractors. This is not a huge market in terms of numbers, but dollars it is. Inventory's in great shape, really, but demand is dropped. And you want to talk about that one? And while we're talking about that, let's just also show the combine graph, because those two go right together.
They go together. This is a function of really two things. It's a function of $4 corn and $10 soybeans in a market where that's probably $1 below break even for most producers. These producers got a pretty significant boost out of the one big beautiful bill, with baseline price increases on safety net programs. And there have been some ARPA money that got paid out in 2025 that have kind of stabilized or relieved a little bit of that pressure. But this is a market that's going to be under pressure. I don't think the commodity prices are a 1 or 2 year scenario, barring a weather disaster somewhere in the world. We're producing grain on more acres. Genetics and technology are increasing the yields on those acres, and we simply have the ability to grow more crop than we have a strong market for today.
Kenny, you represent several dealerships in Southwest Missouri. What's it look like right now in terms of how the year's going from a sales standpoint as a dealer?
I'd say sales flow is good. Customer flow is good. Largely people's attitudes are positive, but there's a hesitancy on larger ticket purchases. It just seems to be really evident in our world that our customers kind of comfortable at that 50,000 and down price point, and the items that are significantly above that are slower moving items.
All righty, Kenny. Thanks for taking time to talk about this today. We'll continue to monitor the market as the year progresses. I appreciate you watching my videos. I'd be honored if you would subscribe to my YouTube channel. You can do that by clicking the mic face icon, and make sure you check the bell so you get notified when I post future videos. Here's a link to my website and the Tractor Fun Store with cool things for sale for the tractor owner that helps support my channel. And here's another couple of videos you might want to watch. Thanks for watching.